Check, check. Sound check. I'm getting green bars on the microphone, so I think I'm coming through. Picture looks very crisp again tonight. Wow, I'm very impressed. Very impressed. Check, check. Sound check. Sonny, let me know you're hearing this. Okay, thank you. Kind of getting worried there. Well, I'm great because I'm about on my vacay. Love you guys, but can't wait to get away from you. So how's everybody doing? Well, thank you. What's up? What's up? What's up? What's the good word? Do I have a long delay here? Hmm. It's hot there. Yeah, I guess you're in the middle of your summer. No, till the 9th of January. I'll still be around in the Facebook group, so all you have to do is stay active in Facebook, and I'll be around. And I wouldn't be surprised to see me do a couple quick videos and post them in the group. Just no live IMLTV. So if you stay active in the group, you'll be good. I will say this: if you don't do things in the group, if you don't post stuff, if you don't comment on stuff, you probably won't get updates from the group. The way Facebook works, so you'll be missing out. So if you don't intentionally come to the group and check it out or comment or post, you'll be taken off, it'll come out of your feed. That's correct. No, not all of IMLTV, just my channel. IMLTV, all the educators do whatever they want to do. But I've got some business, some travel next week that's required, and then the following week is, the start of Christmas. So individual educators could do whatever they want. Since I provide so much ongoing support on a daily basis in the Facebook group, and other educators don't do that, not to the extent that I do, I have no problem taking times off from IMLTV. In the last, I don't know, 3 months, I've probably done 2 times to 3 times as much time as any other IMLTV session, because so many of the sessions run 2 hours. So what other educators do, that's up to them. All right, put up a screen for those that are brand new or have not seen this before. Real quickly, let's get out of the way. We have a Facebook group called Markets Live. iMarkets Live Scans, Forks, and Fibos. It's a public group, but you do have to request permission to join. So you should be able to find it because it's a public group. And you need to be part of that group if you're going to be active in this channel. I will probably put in more time than the other educators, even if they work on Christmas Eve. I'm just saying, so much work goes into the Facebook group. New IML, if you're brand new to this channel, I give away a retail-based Forex Pitchfork course, which is the basis for what we do in here, in addition to the harmonic scans. You've got an opportunity to get caught up on our harmonic scans through the IML Academy. You got the pitchforks in here via this pitchfork course right now. And then we'll be doing Fibos and advanced Fibo work down the road as we start into 2018. You can get web scanner alerts. There's a pinned post inside the Facebook group for that. There's also several good videos which will explain what this group does, why we do it a certain way. We are a new paradigm form of trading. Very, very tight stops. We make more money per pip than anybody else. So the rationale for that is explained in the videos in the pinned post. You can also get a position sizing calculator at fxtraderscalculator.com. So if you're brand new to this session, I encourage you to take a screenshot of this so you don't ask questions like, what's the group name? Where do I get the pitchfork course? What's the password for it? Where do I get the calculator? It's all right there. All right, so Monday I came on and I said I wanted to get you off to a good start for your holiday so you can review what's going on and as far as what you've done so far in 2017 to start looking towards 2018 for some planning. And on the technical side of our training, I said I would commit these last two sessions for question and answers on quickfire trading, on Charlie Delta trading, on general pitchfork trading. And so I'm here ready to finish out your Zoe. Oh. There's a commodian in every group. So I'm here to answer your questions on quickfire, Charlie Delta, and pitchforks in general. Or if you want to ask me questions about life and getting ahead and the mental game, I'm here for that too. This is your session. If there are no questions, I'll wish you a Merry Christmas and be on my way. So this here is for you. Yeah, she can be a troublemaker. But she's also a darn good Forex trader and supporter and coach and helper and supporter and the part of her that's just a nuisance we ignore. Yeah, all angels. All angels. I don't know about that. Well, it looks like I'm going to get off early tonight. Either that, you guys must be nailing the pips. Nobody has a single question. You guys must be making 10% a week, 20% a week. That's awesome. A low, very small crowd tonight. I guess everybody thought I wasn't going to be here, or they've already given up. They saw some shiny bright object somewhere else and jumped the ship. Aww. We'll send them digital postcards from Tahiti. Let them know what it really tastes like. I'll start the Jeopardy song. Nah, I'm not going to talk about shifts a lot. A good place to look for a shift is when you have a really steep move, but I don't proactively draw a shift. I will passively draw a shift, but it's always in the form of a best fit. See, if you have a best fit pitchfork and it should be a shift, you'll catch the shift as you draw a best fit. So I don't intentionally draw shifts. It's just not worth it. Well, pips are not pips, so congrats on your pips, but depends on how you got them. MSL is a manual stop loss. ESL is your actually trade station or emergency stop loss. So there are opportunities to be really tight with our stop losses. Our ESL is generally where we put, where's my pen? Oh yeah, I want to talk about that. Give me 1 second here. Copying a file over. There we go. My last aha moment was divergence in a system I created that I didn't know was there. So, as an example, let's say we were using this pitchfork to trade. We could draw two lines on the bottom fork, on the bottom parallel. The first line, I can't do dotted with this system. The first one would be a dotted red line, which is our MSL, and then the second one would be our ESL, which is the stop loss we use in the trading station. So as we would come down, and if price were to come down and try and bounce off this bottom parallel, we would have two stop losses. The first one is the MSL, right there. That's the MSL. And the second one is the ESL. Now, the ESL is the stop loss you put in your trading station, and it's also the stop loss you use inside trade calc to determine your position sizing. So we do fixed risk position sizing. Same thing as IML does in their harmonic scans and printed on the MT4 charts. We use trade calc to determine the number of lots to put into the trade based on account size, type of account, standard, mini, micro, risk you want to put into the trade, and size of stop loss. So our ESL, typically, not always, right now for most of you, is 10 pips. So we use that to calculate our 10 pip stop loss. We use that to calculate our lots. So when we put these four items into trade calc, it'll come back and automatically tell us how many lots to put into the trade. And if we get stopped out at 10 pips, we lose 2% of our account when we use this many lots into the trade. We don't randomly just throw lots into the trade. The MSL is less than that because depending on the time frame we're trading, we don't need that full extent of the move. And we draw a line because when we do buys on a bottom line like this, as price moves up and rechecks, that stop loss gets to advance for us. And we just keep putting that stop loss in the system. In terms of the ESL, it would always be the price right rather. So that stop loss would be in the system. Here's your stop loss at entry. And when it rechecks the pitchfork over here, our stop loss has advanced to that point as long as we use the red line. So MSL is a manual stop loss, not mental, manual. You draw the stop loss on the chart. So if price comes down, boom, we take ourselves out there. This is an emergency stop loss in case something happens and price goes faster on us. So that's the difference between MSL and ESL. You don't need anything else to develop to identify the swing high or swing low other than the swing high or swing low. You might expand your question so I understand what you're really trying to ask. Usually same day, unless something happened like it ends up in my spam and I haven't checked my spam yet that day. But generally same day. If price gets 8 pips in profit for a pitchfork trade, but you don't move your ESL to break even plus 1, then, and price retraces to around 5 pips, can I still move it to break even plus 1 then, or should I wait till it gets back to 8 pips before I move it? Okay. Go to fxtraderscalculators.com, fxtraderscalculator.com. As I said in the title slide that you should take a screenshot of, the trade calc position sizing calculator is there. There's a video that explains how it works and how to use it. But to do position sizing based on fixed risk, it takes these 4 variables right here: your account size, the type of account, how much risk you're putting into the trade, and the size of your stop loss. That determines how many lots you put into your trade. The Telegram channel is going to have all sorts of things, including some potentiality for trades that you might not be aware of. It may also include some best fit or traditional BS pitchforks that you may want to look at even if the scan is already there, to help you better identify the channel for the pitchforks that you should have drawn. So kind of a like, hey, you better look at this. It's not a signal, it's not a trade setup. It just says you should have this on your charts if you don't already. So it'll be good stuff. Do an example of what? Guys need to give the detail in the questions. I got to go back to the questions on pips. I'm not quite fully understanding it. You've got to go back. You've got to separate pitchforks as we early taught them, because as we came in, we looked at pitchforks. Then as we went further, we looked at Charlie Delta. And then as we went further, we backtracked and brought in Quickfire. So we have we have training for Quickfire and Charlie Delta, which includes money management for both scans and Charlie Delta pitchforks. And so the money management is described there. And if you're going for 10 pips, if you're going for 15%, there is no stop loss movement. If you have a Charlie Delta fork and you're going for the median, there is no stop loss movement. You're playing percentages there. You don't worry about petty stop losses. And I mean to emphasize it exactly as it came out. When you have an 80% chance of getting to the median, that means you only have a 20% chance of the pitchfork failing. And the pitchfork failing does not always mean it's a loser. You'll often be in profit in much of those 20% where the pitchfork fails, because the pitchfork failing is different than your trade failing. So you already have extremely high percentages. It's not worth moving your stop loss and risking the 80% in order to save 2 or 3 pips. So money management for quickfire, money management for Charlie Delta, explained in the training. And if you're going for 10 pips or 15% or median, there is no stop loss movement. Well, I'm confused by that, Zoe. Here's the deal. For the instructions to have bought Goalmaker, it says you must email me. So if you've emailed me and you haven't heard back, it either went to my spam or I haven't seen it yet. So if you want to send a reminder, that's fine, but you already have my email address where to send to. It was included in the initial instructions. If you didn't send me an email, that is also one reason why you might not have heard back from me. So you have to send the email per the instructions. If you did, it's probably there somewhere. I'll get to it. Just this week I'm a little slower, guys. I got a trip I'm leaving on, late tomorrow night, early Friday, and I'm just trying to get things done this week. So I've got a to-do list 5 pages thick. So I'm not quite as responsive as I have been like I would be last week. So it's a little slower this week. But it'll get you in the next, if you haven't got already, it'll get it within 24 hours. Just send me another email. The stop loss, 10 pip stop loss starts with the D. It's not, okay, Neil, you've got to think about what you're asking here. Why are you asking that? When drawing a traditional pitchfork in the absence of a scan, is it okay to still use the quickfire Bollinger Bands MACD to help identify the swing harvest layout? Why are you asking that? What I mean by that is you don't have to worry about that swing low or swing high moving because you have nothing to trade. Until it's settled. Top left of the picture here. So price has been coming down. We have a swing high that's established, and price comes down and forms a swing low and starts moving up. I can draw, my, in this case, if my previous, come on. Get my previous low down here. So I've got my swing high. I think this is the swing low. I make it my swing low. I bring the median back to this swing low. So there's my traditional fork. I have nothing to trade right now. There's no median bounce, there's no upper parallel bounce, there's no bottom parallel bounce. If the D is going to slip and grow and go bigger or deeper on me, then it's going to slip and grow deeper on me. And okay, it moves down here. That now is my swing low. See, there's nothing to trade. There's nothing to risk by thinking that swing low was the swing low. If it does indeed move down here, then everything just gets shifted. Now I have my swing low there, and there's the fork, and the angle's going to be slightly different because the swing low remains the same. And so I just have a new pitchfork. Oh, come on, colors. I just have a new pitchfork. Seriously. There we go. So I have a new pitchfork. There was nothing to trade. It's not like quickfire. You're not entering a trade at that swing low. So that you don't need to qualify that in any way. You wait for price to start to move up. There you go. Now, if you want to, you can. There's no problem with it. If you want to, you can qualify it. But I want to understand why you're trying to do that. Well, it's not a new one. You just drag the bottom swing low to a lower point. There are tools. You've got the swing low. I mean, you've got the quick fire qualification. I've also provided you, on a 15-minute chart, you can be tight enough usually with your stochastics RSI that I've given you guys or showed you guys. Is that a little bit of self-prophecy and law of attraction coming in last? I'm so late. I'm sorry, I have to laugh at that. I don't think I've missed anything. Zoe, if I miss anything, let me know. If I missed any of the questions. Well, but see, you want to make sure the swing low or swing high didn't move further. I understand that, but for what purpose do you want to know that? See, unless you're trying to, and as I've drawn this fork at the top, unless you're trying to take that trade at the swing low, which I would want to know why you're doing that versus just letting that pitchfork play out. Look for a bounce off the median. Look for a bounce off the lower parallel. Look for something, a bounce in there, and keep drawing your forks. You'll get trades. Yeah, I got that one, Zoe. Yeah, I already answered that. Asked and answered, as a lawyer would say. Yeah, it is FOMO. There's so many trades available, right? I had a trader this morning that I work with, and he's like, the scanner's acting up again. It's, I get an alert and it's for a scan that was yesterday and blah, blah, blah. And I'm like, great. You know, where's all your forks? Where's your Charlie Delta? Where's your X-ray alphas? There's, I don't care if it's an old scan, there's still pitchforks off of it. You should get between X-ray alpha and Charlie Delta, you should get at least 2 trades per scan. At least. Y'all are a little too holy grail. I gotta have it now, gotta have it now, gotta have it now, instead of being patient. Do your setups. I've said this before, 90% of the time on your chart should be doing trade setups. Unless you're a scalper. So it doesn't matter whether you're on the harmonic scanner or you're trying to get this thing centered. Okay. Sometimes this will cooperate, sometimes it won't. We'll just see what it's going to do right now. Not cooperating. Alright, so I have a trade. There's my Charlie Delta CDX. To get the lines, Fibonacci's outside the fork, you merely go to your format for your Fibonacci's and put them outside the fork. 1.5. Notice when I hit 1 here, that's going to be 100%. I go 1.5. And you notice it just expanded it. And what I'm going to do here is turn the background off, and I'll make the expansion 1.5. I'll make that fire engine red so you can see it. I'll make all the others blue, even the median, which I normally won't do. So all I did was say 1.5. See how it expanded out? Then I can put on my 2. And I'll also color it cherry red. What we normally do for the Fibonacci's outside the pitchfork is use dotted lines. So if you're looking at the chart, you immediately know. That's just that simple. Yeah, you just delete it. You just delete the random points. Don't let it bother you. Just an obstacle. No big deal. Remember, Alan Andrews used to draw these things manually on parchment paper, on chart paper. Yeah, but I didn't want to move the scan over, Zoe. I just wanted to show how to do it. Yes, move the scan to your TradingView charts. Are the fib lines from C to D significant when they cross the pitchfork lines? They may be. Their potentiality for energy points. We may also have energy points in a standard CD extended retracement, as in a Fibonacci, which we call fork Fibos. So I would select my Fibonacci tool, and I would take it from C to D. I'm not only worried about levels. I don't have to place it right on top of the the point. So I'm going to go from C to D with my tool. And then I have, if I want to extend those lines across, I can go that way, I guess. I don't like the shadowed bands. And I can add, various fibonacci's from the 100%. We got the 1618. If we want to put a 2.72 on there, we can click on that. If I want to have a 2.0, we can click on that. I'll extend the lines. Now they go across the page. So I can get, those are what we call a fork Fibo. It's an extended retracement from the CD. Extended retracement meaning this was the move down. Our retracement would be this way. There's 38. There's 50. There's 60. 61.8. Sorry. There's 100%. Once we go past 100% retracement, it's called an extended retracement. The retracement is continuing onward from the CD move. That's called an extended retracement. The move above 100%. Should draw another color. The move above 100% is called an extended retracement. So those lines from that extended retracement, you could populate this however you want. Search and find stuff that works that's Fibo based. That's how you get those lines. So you have two sets of lines which may serve as energy points. Doesn't mean they will. So let's talk about that for a second because that's a little bit of a segue. So the other day, I think I talked about this, I don't know, in one of my groups. The other day, somebody posted a pitchfork and it was a top move like we have on this fork. And price came into the pitchfork and it was doing all sorts of stuff represented by the green here at the top of the page. Let me make sure you can see that okay. Yeah, you could see it okay. A little bit better if it was thicker. So, price came in, was dancing around, no touch. It was short here, came down, breached it, went up here to this line, which happened to be a fork Fibo. I believe in the example it was a 1272 fork Fibo. And, went up, danced around it, never bounced off of it, came back down inside the pitchfork, blast it, came back down inside the pitchfork, bounced around some, and then finally it's starting to approach this line where these two lines are crossing. And it's okay, y'all are green, you're just learning this stuff, but the trader incorrectly called that an energy point. It is the intersection of two lines. It's not an energy point. Oops, what happened? So that's not an energy point. It's a potential energy point. What we have happening here is nowhere before that potential energy point, did either of these lines interact with price. It's as if they weren't there. Does that make sense? They're merely potential energy points. That's not an energy point if either of those lines was not holding price. Am I clear? I'm waiting to see yes. It must be a terrible lag. Not you, Zoe. I know you know it. So let me give you an example then. If that's not an energy point, yes, it needs to interact with something. Let me give you an example of a true energy point in a chart. So what you see here is two pitchforks. Okay? The first pitchfork I want you to look at is this gold one, and oh my. That's going to be served by this gold line, which happens to be what? The median of the fork. The second one is a fork in another direction, represented by the blue line, which blue won't show up here, so I'm just going to use green, down here. Wow, maybe blue would be better. Maybe red would be better. Yeah, it'll show up along. One of those is going to work. Okay. So what's powerful about an energy point when it's defined like this is it's two separate systems and price is being controlled by both of them. For the median of the downward pitchfork, look at the interaction I have. Boom, boom, boom. This one was real close. Boom, boom. So price is already interacting with that line. That line is serving in a lot of capacities, although it's been breached. There's multiple hits on that line. Then we have a separate pitchfork in the upward direction, and we have a line down here. And that line, when price comes close to it, that line is controlling price. Totally separate system. One pitchfork one way, one pitchfork another way. And now price is interacting with that. When price gets in that area, price is entering. Look, boom, boom. So, boom. So what happens then, these two are going to play out at some point. There's a squeeze play going on. And at some point in the near term, when they cross, that becomes an energy point because both of them were controlling price. Now back to our example here, let me erase the green for a moment. Let me erase all this here. And you'll see this happen. Same kind of deal. You want at least one of the lines to be controlling price at some point. So maybe you have a fork where, prices come in and the fork is showing, decent amounts of interaction. And maybe price breaches the fork, but it bounces off that line. Comes back down, does this, and now it comes back up here. That's an energy point. The fork had already been holding it on this line. Price bounced off this line. These two lines are intersecting. There's a high probability that a single candle is going to come up here and bounce off that point. That becomes an energy point. Just because two lines cross is not an energy point, because you'll have, just like support and resistance, there'll be 1,000 lines that cross this pitchfork. Any line I can have that's horizontal support and resistance, Camarillo lines, Math-Murray lines, Fibbo pivot lines, Fibonacci lines, extended retrace lines, Elliott wave projection lines. There'll be 1,000 lines crossing this fork. Every one of them is not an energy point. Energy points where you have a horizontal crossing a diagonal are unique because there's only one place in time that intersection be tagged by a candle. That's why it's a very powerful move. On this before the intersection, you can have candles interact with that numerous times. Nothing special about that. On the pitchfork, you can have interaction with that multiple times. But there's only one candle that can tag on the time frame you're on. There's only one candle that can tag that intersection. The candle before and the candle after are going to miss that intersection point. That's why if price has been respecting both lines, this line, and in this case this upper parallel line, if price has interacted with them and shown some level of respect to that line, it sees it, then that becomes a very crucial point. Well, when I say controlling price, that would be an extreme condition like I showed in the screenshot. As long as price is respecting it, price sees it and sometimes bounces off of it. Also, it doesn't have to be both lines. It just can be a prominent one. Tim shows fork after fork after fork where the 1618, because that's just a high percentage reversal. So I could have no touches to the 1618 coming into the intersection. I have 0 touches. Price might be totally inside the fork. So the 1618 never interacts with it. So price starts to move up. It's inside. Price is still inside the fork. And then here comes our 1618 line. And once again, there's only one place price can interact with that. So an extremely powerful line like that would be good. Ditto, what else? A scan. If this line was not red, but green, because we had a harmonic scan going on, and the scan was at that point, i.e., somewhere along the line, our scan D ended there. That horizontal green line becomes an energy point. If this is a good looking fork, if you've had good behavior inside this fork, then this creates an energy point between the entry line of the scan and the pitchfork. Once again, a diagonal. There's no coincidence. No, they don't attract it, but they create squeeze plays. An energy point won't, if you have a strong line, it attracts price. It attracts and bounces. That's the whole deal on long wicks. The long wick feels the allure of the support or resistance line, and I have, let's use the median down here. I have some candles moving up, and we could look at their size, and all of a sudden we have a candle that goes, whoop, goes all the way up. That's an abnormally large candle compared to what you see in your field of view. And what happens then, it's attracted to the median, but if the median is strong, then that long candle is just a scout. It was just sent out, to see how strong that line was. So it grows up, green. That long candle will go up and check the price at the median, or check the resistance at the median, and then it pulls way back and it ends up leaving that single wick. And all that means is that was a long scalp that went up, and the support or the resistance line says, nope, you're not getting past me. So the scout runs back to the troops and say, we don't need to try and bother going here. Let's just keep going this way. We're not going to get across that bridge here. So strong, in this case resistance lines, will attract price in and of themselves. So it's not so much the energy point that attracts it, it's there's a squeeze play that goes on. You have two strong attraction points there, and so it squeezes it. There's no such thing as coincidence on the charts. Flush that out of your mind. There's no randomness on the charts. No such thing as a dumb question either. So ask it. If you think it, ask it. Do 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 do. Come on, ask your questions. You got to pretend like this is it. I say pretend. Don't ever think the forex dies tomorrow. That today's the trade you're in is the last trade. Don't ever let your mind think that way. But right now, it's okay to think that this is your last training session ever. So get your blasted questions out. Get your $145 worth this month, because there ain't gonna be no more sessions from me the rest of the month. You'd have to take two screenshots of the same scan where the scan repainted and actually moved the green line. The green line's fixed based on Fibonacci's in the scan itself. The green line can't move. So if you've seen the green line move, you got a problem. You might think it moved, but it shouldn't. So if you see cases where it does, you need to show me the before and after screenshots. The green line is not random. That's placed there by 4 Fibonacci's associated with the scan. And so it's a boom, it's there. You'd like to see it interact with both, but I gave an example of like the 1618, which is a super strong Fibonacci extension, fork Fibo. You don't have to have any interaction with that. If price is already in the pitchfork, you can't have any interaction with it. If price stays contained in the pitchfork, as I've drawn it here in green, there's no possibility for interaction with that 1618 until price comes up inside the pitchfork and hits that line. So it can be just one line that holds price, that price is interacting with, if this line is super strong from something else. But I'm not going to see random lines there that create that point. You want to see price interacting with it. You can have energy points inside the fork as well. Same deal. The easy way to do that M7 is to, if you, where are you getting a 30-minute scan? I've been recruited as a fusion trader. I've just had too busy of a fall to take them up on it. It's something I was recruited to do, and I may do it, but it won't be until maybe the second quarter. I wouldn't be a mirror trader, I'd be a fusion trader. On scans, we are qualifying for quick fire. If the D breaches the entry line, it is no longer a quick fire trade. You have some small breaches, okay. I'd say 2 to 3 pips on most 15-minute scans. If it goes beyond that, the problem you're going to have is something else will cause the reversal, and unless you know what it is, you just don't have anything to associate with, because there is slush in the quick fire qualification. It's not a precision move. Divergence, even on a 15-minute chart, could drag out for 15, 20 pips. Obviously, if price goes above the RSI 70, it can go to 75, 80, 85, 90. Price can continue to move up. Quickfire merely says at the time the green line is at the time price is hitting the green line, it is ready to turn around. And if it's a strong scan, it should hit that resistance point and turn around. But the quick, take that line away, you'll have a big slush zone for which you can qualify as quick-fired probably. It just depends on the size of the scan, but it could be 10, 15, 20 pips wide. You have no precision in where that quick-fire is saying turn here. So if it breaches the green line, you need another line to see what might potentially be the reversal point. And typically, if it was quick fire qualified at the green line, you're still, it's not going to run out. As price continues to move up, you're not going to see RSI drop from 70 to 65. It's not going to happen. If you already have divergence, the divergence typically just grows stronger as you move up in price. If you've already hit a Bollinger Band, you're just going to be going into the second or third Bollinger Band. So once you have a scan, what I'm saying there is, of course I couldn't draw it perfect. What I'm saying is, if price went past the first Bollinger Band there, if price goes higher, it's still gone past the first Bollinger Band. If down below in your RSI field, if that's my 70 line, and at the green line, RSI went above 70, I guarantee you as it continues to move up, it's just going to move up in RSI. It's going to stay more and more overbought. And if you have divergence at play, it's going to continue to be divergent as price moves up. So what you end up having without the scan is a box that, no, I didn't mean to make it solid, is a box that in that entire area is essentially quick fire qualified. So once you get past the green line by more than a couple pips, you need to find what else it is that can turn price. You can't determine. It's not like it gets unquickfire qualified and you wait for it to qualify again. It's going to remain quickfire qualified in that entire box. But there has to be, when it turns, price doesn't turn in black space, guys. If price continues to move up, if price continues to move up, even though, see, the problem is you're misled because the IML scanner continues to move the D up, which is incorrect. That's not how a scan works. The scan is the green line. The scan determines the green line. the scan should stay on the green line. IML scan, if price goes up to where I have it drawn there in green, the IML scan continues to grow with it. But the scan is essentially over in terms of the scan providing the reversal a couple pips after the green line. It doesn't mean, see, what will happen is, because the scan paints with it as it moves up, from the IML scan continues to paint, when price finally hits another resistance line that's strong, maybe that is a daily pivot. And then price drops from there, you're thinking it's the scan that created the drop. It's not at that point. It's the daily pivot line, it's just you don't see it. So you have this essentially quick fire qualified box once you get past the green line, or you might even have it qualified before you get to the green line. It just depends on where everything sets up. But nonetheless, after the green line, you have a box, and any price in that box will be quick fire qualified. So in order to take a trade, now look, let me rephrase this because I don't want you misquoting me. I'm not saying there's not potential for a trade in here per the scan, because what happens with this kind of scan, is you also have, let me move this down a little, you also have the scan stop loss printed on your charts. So technically, anywhere in the green line to the red line, you could take the trade. If you take it real early, like when you first sense there's qualifications, you took that trade here, and price just continues to run past you. If you're using the stop loss on the printed chart, on the scan, well, you're safe. But now we get into the fact, well, maybe that's a, depending on the scan, maybe that's a 50 pip stop loss. I'd rather get in there with my 10 pip stop loss and make 5 times the profit in the same move for the same size account with no increase in risk. 5 times the profit. So if you want to use the scan stop loss, you could trade anything past the green line, up to and including the stop loss. Yes, in a true scan, the scan stays on the D. Guys, the D line, one more time. The D line, the entry line, is a line represented by 4 Fibonacci values. This is why you need to understand how a scan is painted, or what creates a harmonic scan. So the algorithms go to work as soon as the first retracement is discovered. In other words, here was a swing, here's a swing down, and right here, when it reverses and it records that as 618, it says, okay, there's a number of patterns that potentially have a 61.8% retracement. So automatically now it labels this XA, this is B, and now we start to go to work to see, well, for pattern number 1, I have another retracement I work on called the ABC. So when price continues to come down here, if it meets the qualification for scan number 1, be that a bat or a crab or a butterfly, whatever, if that meets that oh, this is exactly 886. Well, that's, I got 2 scans that might qualify for that. So the algorithms keep going to work. But then they do some other stuff in here. The bottom line, let me remove all the distracting qualifiers here. The bottom line, by the time, no. By the time it gets to the preliminaries, and now it gets very precise, my X, A, B, and C have been drawn. It already knows what the D is. It already knows what that green line is as price starts to move away from the C. IML just elects not to paint it until it moves 91% of the way to the D. But at the time price starts leaving the C swing, you don't see it printed on your charts yet. All you do is see some random swings. You see price, it came down and made it here, it went up here, came down here, now it's leaving. Well, that's the beginning of the W, and the algorithms tell it right here, it already knows where this green line is up here. It already knows. IML chooses not to let you see that and not to paint the scan. That's all. So your green line is there, you just can't see it yet. You're not going to see the green line and you're not going to see the yellow scan until price gets, it knows that's the D point, until price gets 91% of the way from C to D. Now all of a sudden miraculously the scan appears, the alerts go off, and there you go. Now how does it know this D line? Why does the scan print there? Remember, the scan, in terms of where the D is, it always prints immediately above price. It prints immediately above price. So if price is over here somewhere, thicker. If price is somewhere over here and it knows this D line, it knows the entry line, excuse me, I keep calling it the D line. It knows the entry line. That's a fixed price. That does not move. And I'll show you why it doesn't move in a second. So this endpoint for D should print on the entry line, and it always prints above price. When IML turns the scanner on and it paints it, what you see then, if price is right at the 91%, that's the scan that you see painted at that time. And so the D will continue to move up the way they paint it. Technically, they already know where the D line is. The entry line's already on the chart. They know that, again, down here. How do they know that down there? Because here's what happens. I'll use white. There's formulas for the D. There's going to be the BC extended retrace. So the move down here, extended because it goes past 100% of B. The BCD retrace is 1%. The XAD is another percentage, and it happens to land right on the same line. The XCD is another percentage, and it happens to land right on that same green line. The XBD is another percentage, and it happens to land right on that green line. So I have 4 Fibo percentages that land on that green line. The green line is the magic point. That is the resistance for this scan. Period. End of story. It can't move. And so IML tricks you a little. That's the end result of it. IML tricks you a little because they continue to paint the scan. It should be yellow. They continue to paint the scan as the D, even when it moves past the green line. That's no longer the scan. That's no longer the percentage that's allowed for this to be called a scan, because those percentages expire right here on the green line. All those percentages overlapped each other there. So this is not really part of the scan anymore. It will move east. The D should move east, but it should not move north. The D will move east only on this line. So what a scan would, how would I say it? What a true scan would look like. And I hate to present it this way. I'm not bad-mouthing IML. I'm just telling you the way they work their scanner. Remember what I said. That green line is fixed because of values that it achieved from all these various percentages being at play. So off these 4 points, we end up printing a green line where all 4 of those percentages lay exactly to the pip on top of each other. Now, what should happen in a scan that could paint down here is I would have price come down, move up, pull down, it moves up. Right here at this point where price is right here, the scan should automatically paint fully extended to here to the D. When price continues to move eastbound as it climbs up, that wing should move to the right and land on the D, but directly above price. So the scan, when price is now where I have it drawn, the scan would now look like this. So it can move eastbound, but it should move eastbound on the D line until price finally comes up and touches it. Once price breaches the green line, if we were to continue, it continues to move eastbound as it moves up and it finally gets to the green line. At that point in time, your scan should look like this. If price continues to move up past the green line, your scan can't continue to paint. It does, but it can't because that's the line. Now you've disassociated the line with a false painting of the scan. And that's why if it doesn't reverse here, but it goes up 8 more pips and then reverses, that reversal has nothing to do with this line, which is the line established by 4 Fibonacci relationships that define this whole pattern to begin with. So if we go more than a couple pips on either side of the green line, it is no longer the scan that is causing the reversal. It is other resistance or support. In this case, resistance because we're moving up. But I saw it move 8 pips past the green line, and then it turned around and went 200 pips down. Yeah, you're right. Some other support, some other resistance it hit, and it was strong enough to turn it. It does, because you see it as the scan, and because the scan continues to move up, it is not the scan that caused the reversal. Does everybody get that? Or does anybody not get that? Let me ask it that way. And for the average trader who doesn't have precision tools, the only thing you can do when price starts to approach the green line, when you get the notification for the scan and you see the scan paint and it's short of the green line, I would be hopping like a mad dog trying to find other support or resistance potentially above it. 4-hour Fibo work, 30-minute Fibo work. I'm looking for trend lines. I'm looking for pitchforks. I want to find something that in that zone that typically is all quick fire qualified, I want to find some sort of lines in there that potentially it could bounce off of. Safe travels. Thank you. Same to you. So we will get to that point. I'm going to work on it some. I'll see if I can finish it over the break. So I'm going to give you some set of support and resistance. Good, high quality intraday support and resistance. And you can check as price is approaching that green line, if in the immediate area above the green line, if there's any other support or resistance that's strong in that area. And then if you get a bounce off that, it's still quick fire qualified. But if you get a bounce off that, you have a percentage chance of a trade. Right now, with the tools you have, that's as good as it's going to get. You may also use, depending on how big this move is, you may also use things like the stochastics RSI to give you a hint if we've topped over on a trade. Nope, that's not a confirmation, because how can you trust it? Think of it this way. You have a friend and you sit there and you've known them over time, and we all have friends like this, or we all have acquaintances like this. I don't know if you want to call them a friend. You have acquaintance like this, and sometimes the person tells a story and you find out, oh my gosh, it's the story went nothing like that. He lied all over the place, or she lied all over the place. And then sometimes they tell you a story and you go and you check it out and you find out what they told you is exactly how it went down. That's the history. And now they come to you, hey, got to go to lunch. Let's get to lunch. I want to talk to you. And they tell you a story. Do you believe the story or not? Are you willing to put money on that story being the truth? They've already lied to you and told you the truth. You don't know which to believe. That, you're forcing a trade. Draw more forks. There are plenty of times you will have a perfect bounce off the median. You'll have a perfect bounce off the parallel. Quit trying to force a trade that's a crappy trade to being a trade you want to take. That's FOMO. That's fear of missing out. But just think of it as the friend that lies to you and tells you the truth. It's a mixed bag. And now he's going to come tell you a story, and you have to make a decision as to whether you should believe it or not without being able to check it out any other way. So check Fibo lines before laying CDX. I don't understand that. No, CDX is automatic. At the time you draw your CDX, it's automatic. I'm playing here because we're way past, the CDX didn't give us anything. There were no good bounces at the median. There were no good bounces at the top. Your big candle blew through it all. And so now price is up in this area. I'm just seeing if there's any geometry from the pitchfork that's still at play. And so I'm swinging the pitchfork around trying to see if there's angles that make sense. Maybe I could find some angles that make sense. And there's a couple that may. Here's this top one that I have drawn. It bounces here. It bounces here. It bounces here. So that might be the right angle for the pitchfork. We don't have enough data inside the pitchfork to know that it should be kept at X. So I'll move it around to see how things play out. You could also then expand and go past, what was my top one too? And they need to give us more choices in here. So I'll just erase one of these other ones. I'll make this one a 3 and a 4 and a 4.5. I'll just keep extending it out because I'm not trying to see if there's going to be a potential hit. I'm just trying to validate to see where this fork is right now. And if I have potentially the right angle on it. You got some hellacious impulsive moves right now. And there may be nothing. We're way past the fork, but I like to keep looking at it just in case. The advantage of TradingView is you can have templates and have various it's not there's nothing inside a DNA spiral, or it doesn't even have to be a spiral, just a lot of just a lot of nonsensical movement where nothing is consistent. Sometimes it touches to the pip, sometimes it doesn't. It's just nothing I want to play with. There's plenty of other forks that have. Again, quit thinking that that's the only one. So you just ignore it and you move on. Now this is a move I would look here. See, I can move this over to my 15-minute chart and then expand it to an hour, 4 hour, whatever, and you'll probably see a good fork in there somewhere at a larger time frame that'll give you good hits. Oh, white ain't going to help me, is it? And you'll probably see a good fork off that somewhere at an upper level time frame, which may have relevance. So these little scans and some forks, when you see these kinds of moves, there's always good stuff there that you could go back and find more stuff on. And I'd rather spend my time doing that than I would counting on a touch after the median has already breached 3 times and touched 3 times. It's just not good enough to trade. There's other stuff to trade. Go find the other stuff. Right? Yeah, always look left. All right, any other questions? So let's get it together. The guys that are here now, you know what we're doing. Pitchforks, quick fire, Charlie Delta. There's so much to choose that we don't need to have thousands. I mean, I could show you trade entries. What does it do? What does it do? They're all, the trade entry is the trade entry. Follow the criteria, take the trade. So you know what to do. You know what we're doing. You have a chance to set up for 2018 now. Sure, people take comfort in drawing on trading higher time frames, seeing them as more reliable. Well, first of all, they're going to have to prove that. So you say it's more reliable. My friend says it's more reliable. Let me see your trading report. And here's the thing. So they show you a trading report, and in the month of December, they made 22%. You say, wow, congratulations, that's really good. If I were to take the same trades you took, I'd have over 100%. There's a reason they're ask them why they trade the higher time frames. It's not more reliable. No way. No way. They have no precision in there. It's not more reliable. It might be more reliable in the sense that it's easier for them to win. But the problem with that 4-hour trade with their 150 pip stop loss is, it's more reliable. The trade went, it set it up and, it ran for 3 days and I got 300 pips. That's 4%. I get 5 pips, that's 1%. I get 10 pips in the same time, that's 2%. I get 15 pips in the same time frame, that's 3%. I get 20 pips in the same time frame, there's my 4%. 20 pips versus 300. So the reality is you can't talk to somebody who has a brain that operates in the old paradigm. Because the reality is, what you can say is, if I were to take the same trades you would, I would make 15 times the profit. Or I could make the same amount of profit you do, but with 1/15 the effort. They don't understand tight stops. You're going to say, I trade with a 10 pip stop loss, and they're going to look at you like you're crazy because in their time frame, they have no indicators that could give 10 pip precision. That's why they trade with 150 pips. They have no, you talk about reliable, it's just not an accurate way. If that's what they say, they're just not accurate. And here's the thing, you don't have to try and convince them. "10 months from now, send them digital postcards from the Caribbean, or your cruise ship, or your ski loft. Hey, how are those big trades working out?" So, you can't, like I said, here's the deal. It's the same as with recruiting. If you're a business builder, it's the same with recruiting. When you talk to a trader who's in the old paradigm, they're either looking for something better because they already know the old paradigm doesn't work. Now, they might be aggressive and they might have some sort of hype and they're in some new, whatever, they've taken a few classes so they think they understand what they're doing and they're happy with what they're doing as a old paradigm trader, big fat stops. They're not going to, they've already got their ego invested in what they think they're doing. There are traders who are on the old paradigm, and I can tell you this because in 14 years, year after year after year, I have traders come to me. "Steve, I've been trading 3 years. Steve, I've been trading 5 years and I've yet to reach consistency." You think it's a long haul after 90 days. I've got traders that come to me who've been at this 3 to 5 years who say, "Oh my gosh, I've just, I know the Forex works. I just haven't been able to get any consistency. I'm ready to find a new way." So there will be, like I said, it's just like recruiting. Some people are going to hear the message. no matter how you present it. Other people, you could present it like Tony Robbins in an Armani suit, and they're not going to hear the message. That's not on you. That's not on you being a new paradigm trader. That's what I was saying, Neil. That's why you trying to get, that entry. Look, Zoe says yes, and she's right to an extent. Okay, she's not wrong, but in terms of what you're doing, yes. What you're trying to do is find a technical answer. The answer isn't technical, it's mental. Why do I say that? This is worth the explanation. It's worth going just a little bit longer. Because what we know about swings, remember what I said before. A swing is always predetermined. It originates from some Fibo activity in front of it. It might be well in front of it. It might be right in front of it. So let's say I have a move up, which pulls back to the pip 61.8 and then starts taking off again. I don't need to qualify that. If it's to the pip at 61.8, I'm not that worried about that swing low slipping down. And this point will always be a Fibo percentage. Just like this point will be a Fibo, and this point will be a Fibo. These are all going to be Fibo points from something in front of it. We haven't got to Fibo yet in this group. The title is Scans, Forks, and Fibo. So far we've done scans and forks. As we get into 2018, we're going to focus on Fibos. That includes retracements. That includes projections. That includes extended retracements. That includes expansions. That includes harmonic targets off of 62, which are all Fibo based. There's lots to learn on Fibo. Every one of these swings is a result of a Fibo. If I can find it, then it validates the extent I can measure it. Just like I said, in this particular case, I can see if I measure from here to here and I come back down on my Fibo tool, that's exactly at 61.8 to the pip. I don't have to worry about that pitchfork. If I draw a pitchfork at that point, I don't have to worry about it slipping on me. I can trade the swing low. When it's in black space and I don't know the Fibo numbers, I just watch this thing and I can trade it from the swing low because I know percentages. We use a tight stop. I have an MSL. If this goes up just a little bit, let's zoom in here. I can't zoom in, but let me see what color I could use. I can't. If this goes up just a little bit and reverses down, what have I done? Oh, -3, -5, depending on where I am with my trading and what tools I have. -3 pips. What happens if this trade goes? Oh, 40 pips to the median. I could let this thing go 10 times in a row. It's not going to happen. I'm exaggerating the point. I could set this and be wrong 10 times in a row. I'm down -30. It makes a run to 40, and all of a sudden I'm plus 10. And then it goes past and up. Oh, there's another 4. Quit evaluate. Get the fear of the loss out of your head. This is part of the new paradigm as we trade with such tight stops that it's okay to be wrong, because when we win, the risk reward is so great. You don't have to try and convince your trading friends, and you don't need to get their support or belief in what you're doing for what you do. Yeah, that makes you a lemming. If you're not going to deviate off the course because everybody else is just walking off the cliff and you want to walk off with them, that's your choice. You don't need their confirmation of what you do to make what you do valid. Pitchforks have been around forever. The reality of the math of the pitchforks are around forever. It can be traded right away. It's mental, not technical. Some traders can't absorb a loss here. I'll do this trade all day long if price, looks like it's a true swing and it starts to move. What would be an excellent way in blind space to feel comfortable taking that trade? What would be a great way? How about I've already given you the answer to that in this session? You just didn't have RAS out there to catch it. What if from my swing high down to my swing low, whoops, blue, Other things come along the way as you get more time. You'll be able to see the Elliott wave moves. You'll be able to put Fibo percentages on the waves to project down. See, when I see a move coming like this, I know something. I know this is probably a wave 1, this is probably a wave 2. If that's the case, there are Fibo tools where I can measure that distance and project off of it, and it tells me where the wave 3 might end. And lo and behold, I look at this candle, the last candle that's coming along, and what did I say earlier? Oh, it's a big, fat, long, extended candle that's multiple times bigger than the previous candles. And it's landing right on a wave 3 projection. Guess what? What's going to happen to that candle? It's going to go down there and tag that projection line and start to leave a wick. And because it was a big red candle coming down, I know for the most part it's being pulled by magnetic attraction, if you will, by a gravitational pull. It's being pulled to tag that line. I've got my pitchfork. And I feel comfortable. If I'm wrong, I'm wrong. But trading is about putting high percentages on things. And so as this candle starts to pull back, I can take that trade. And now I can play the 80% chance to the median. So you start looking for telltale. You guys looking for too many shortcuts too fast. You're trying to make the pitchfork the holy grail. It is a holy grail, but there's some techniques you have to understand. There's some, tidbits around it that you need to understand. Some have invested in tools. I've got tools out there that let you know within 2 pips when you're at this bottom. So some who are committed to the Forex, who are going to be professional traders in the sense that they want to have job level or higher income from their trading, will eventually have more tools. You can use your stochastics RSI now probably to be within a 3 to 5 pip zone on that. Which is pretty cool. If you're using a 10 pip stop loss, you still have 5 pips you can use as your MSL. It's not a technical issue whether the swing low can be traded. It's a mental issue. Can you accept the stop out? Some people can't accept a single stop out just because of a negative sign in front of it. Some people's RAS, or sensory information gateway system, will not allow certain things. They have to grow in their trades. No, no, this is not old paradigm where you wait for a closed candle. You can't have entries. Go get Trade Calc and watch the Trade Calc movie. Okay? You have to understand how trading works. You have to understand your entry point is in terms of what price sees. Your entry point is not associated with price. Price doesn't care if you get in this trade. Price doesn't care where you get in this trade. Price doesn't care whether you profit or you lose in this trade. That's a layer on top of price. If I have a fixed stop loss, which we use, it sits right there. That stop loss does not move. And so if you enter with a 2-pip pullback or you enter with a 12-pip pullback, price doesn't care, but your stop loss has now grown. You've taken it from 3 pips because you got in 2 pips into the trade and 1 pip below, let's call it there just for this example. So you've taken your stop loss, which is now 3 pips, and now you're stretching it out. Now you're 12 pips up here and 1 pip below. Now your stop loss is 13 pips back. You have to use the same stop loss. It's there for a technical reason. It's not this random thing that a lot of people teach you where, oh, here's the trade, and wherever you get in, you can randomly, which has nothing to do with the charts, which has nothing to do with Fibonacci, which has nothing to do with harmonics. If you enter the trade 13 pips up, oh, it's okay. Just go back 10 pips from there and use that as your stop loss. See, that's totally random. It's not based on anything. So the stop loss is fixed, guys. The later you enter the trade, the more you expand your stop loss, the more risk you have in the trade, the more you will lose if you get stopped out. So you don't want to do things where, I have some sort of pullback candle. I have a wick that comes down to here and it pulls up to here and closes there, and I wait for the next candle to start out blue. No, that's old paradigm. We have to get in down here, and we're not worried if we're wrong because it's only -3. And we got an emergency stop loss down here at -10. We don't do closed candle entries here. They're all live candles. The only place we use a closed candle is on a Hall flip, where the flip has to be based on a closed candle. And again, there's reasons that make sense for that. All right. Take good notes. All right, you guys are set. Questions can go to Facebook. We have coaches that'll be around. I'll be around, just not very active. Actually, probably what you'll see is it'll appear I'm more active over the break in Facebook than I normally am, because right now I've been so busy with coaching. I've got private clients and I'm winding all that down. So that's done after tomorrow. And so my coaching, my coaching goes away. No IML, no private coaching, none of my community group, no PIP club, no FXFX, no precision traders, all the various groups that I coach, and I'm shut down for Christmas. So I will be validating trades more in Facebook over Christmas than I normally am. It's not going to be the other way around. So with that, I'm going to say happy holidays. I love you guys. I love your enthusiasm. I love your commitment. And I will remind you, don't get too out of whack on the holidays. Don't get too lazy. Don't stop your self-development reading, right? Continue to do that. Continue to take trades as you can. Continue to post and ask questions in the Facebook group. 2018 is going to be a spectacular year for many of you traders. 2018 is going to be a change your life year for many of you traders. So it's very cool things are about to happen. Very cool things are about to happen. Lastly, the way you're going to get to your goals is you have to take your dream and plan them out a little. But all you have to do to make that happen, it's okay if you don't have your goals perfectly right. You don't have your tasks perfectly, managed out. That's okay, because you have how do you overcome your goals not being perfect? As long as you have the eye on the prize. Whatever the prize is. As long as you have your eye on the prize, if you deviate from your course, you keep your eye on the prize. You just set a new course aimed at that. If you deviate from that for whatever reason, set your eye on the prize. You set a new course. How do you do that? You persist without exception. If you persist without exception, no obstacle is going to stop you. It doesn't matter if it takes longer than you thought. If you persist without exception, you will capture the prize. I'm here to help you do that. I won't do it for you, but I'm here to help you. As long as you persist without exception, whatever your dream is, you can achieve it. All right, y'all have a great Christmas or whatever holidays you celebrate. Be safe on New Year's Eve. 2018 is going to be our year, guys. Signing off.